dialogues. This is our last session for 2021. It's been a real pleasure having a lot of our guests and analysts and speakers on board this year for some fascinating conversations around the energy transition, which we are all aware has really had a bit of a lift off in the last year or two, and coinciding perhaps with the COVID pandemic, but nevertheless garnering a lot more attention than it was, I'd say, 24 months ago. And today, to round off our series for the year, we're going to be talking about hydrogen and the outlook for the year ahead. The fuel of the future, as many are dubbing it, and many conversations and a lot of money pouring in to that solution. And I'm delighted to be joined today by Emanuele Bianco, Program Officer at ARENA, and Sohail Shatira, Senior Energy Specialist at Apicorp, and Reshma Franci, Senior Manager for Scenarios at the World Energy Council, and who's also pursuing, I believe, research at Munich University. So thank you very much for joining us, everybody, today. And we like to kick off the discussion every Wednesday with giving our guests a chance to sort of pick a headline from that news bulletin that you've seen up on your screen, one of those which may have grabbed your attention, and why. So Reshma, we'll do ladies first today, and I'll ask you whether any of those grabbed your attention and why.
So thank you, Diala, for having me. In terms of one, I wouldn't say it's one, but rather a theme which has stood out to me when I read through all of the top headlines. And that is, it's not about government setting targets. It's not about governments making policies or incentives. It's about the private sector and investment going into the hydrogen generation. That, as well as the demand side. So it's not just the supply side, but also we see applications such as in the case of aviation. So really the theme here is that investments are coming in, and it's not just because of governments making targets. So I think that was what stood out for me the most across all of the key headlines.
Well, let's talk a little bit about the investment angle. I mean, how much do you think we've seen enough investment into hydrogen research and projects so far?
So here now, what's happening is it's going beyond research. It is going into actually implementation, the pilot projects, the hydrogen hubs. So it is really about getting that learning curve going beyond the technology and development phase, beyond that innovative design. It's moving into diffusion. It's about really setting things in stone and on the ground. So I think that's where investments are going, and they are responding. I wouldn't say that the governments didn't have a play to this, because it is the governments and the national energy hydrogen strategies, the net zeros which came out, the very strong climate change related pledges which have driven these investments forward. But really now is the time for diffusion, where the investments are going into pilots and hydrogen hubs.
Okay, Sohail, welcome again. Just to stick on the note of investment that Reshma has sort of pointed out. Obviously we've seen, obviously billions poured into sort of the new solution of hydrogen, if you like, going forward. In the region here, we've had, a plethora of deals and MOUs signed in the last year or two, very well-intentioned projects that have kicked off, some of them, and some of them are just at the sort of nascent, let's say, stage. But again, Sohail, I'll put the same question to you, are we seeing enough investment? And many would argue that has to be in technology so that we can scale up and obviously get our costs down, right? So Apicorp itself perhaps isn't even putting a lot into hydrogen projects, relatively speaking, to where else you put your money. So again, what's it gonna take to shift, to make an even larger shift than what we've seen in the last year or two?
Thank you, Diala. Thank you for having me today. Well, we at Apicorp, as a multilateral development bank, we have a business model that we usually finance bankable projects that have a relatively low risk profile with a long-term view on returns or investments. When looking at the hydrogen markets now, we see that most of the projects in the region are being driven by governmental investments, by NOCs, by state-owned entities. We see a little bit of skepticism when it comes to private investors and the MDBs, and the reason behind that is the risk-reward equation, if you want. When looking at the risks associated with the hydrogen markets, there are a lot of risks that needs to be mitigated. If we want to talk about the policy risks from a regulatory framework and all the policy gaps that need to be filled in, especially when it comes to certification, standardization, guarantees of origin, basically cascading those strategies and roadmaps to things that could be used in contracts between suppliers and off-takers, like take or pay clauses or destination clauses, for example. The second risk is the market risk. As Rashma said, we have a lack of demand. If you want, more focus is being on the supply side. And here governments have a major role to play to design demand pull policies, if you want, through public procurement, through mandates, through blending quotas, in order to activate that side of the equation. For investors, when you look at the market that is not balanced, so you have more supply than demand, you do not have a really substantial offtake right now, no clarity on the price signals, that risk plays in the investment decisions. The third risk is the technology risk, as you noted out, when it comes to the electrolyzer technology for green hydrogen or CCUS technology for blue hydrogen. Basically, we need to scale up these technologies, and scaling up, basically, most people talk about the cost reduction for electrolyzers or CCUS that will drive down the costs for green or blue hydrogen. However, from the investor perspective, you are scaling up these technologies, so you are needing substantial amount of funding and financing. And that has to be secured from someplace, either from the public sector, private sector, or the MDBs. I mean, the IEA notes that we need $5 trillion by 2030 on an annual basis to reach net zero by 2050. The big question here is who's going to provide these $5 trillion?
Okay, well, let me go to, thank you, Suhail, to Emanuele to answer perhaps one or two of those points that you've just made, Suhail. Emanuele, just on the first, point of investment, we need more funding. Rashma said that it needs to be the private sector really has to step up. More governments need to, as Suhail pointed out, put at least the incentive there to make sure that the demand is there, and therefore the investment will come in. So it's a chicken and egg, Emanuele. Where would you say, is the priority? Do we need to secure demand and then all the investment will pour in, or does government need to take more of a lead in policy on that front?
Okay, thank you for the question. And yes, it's a chicken and egg problem, and that's what makes hydrogen different from the power sector. That's why we need a different mentality compared to the policy making that we were used to when we were developing policies for decarbonizing the power sector. And indeed, in our analysis in IRENA, but also by just looking at the reality and what is going on in the world, projects now get kick-started if the two ends meet, if there is a support for supply and there is a support for demand, and there is someone that is able to share the risk, a mechanism to make the supply secure, that someone will actually buy it, and the demand ready to actually use green or blue hydrogen, or mostly green, to be honest. And all the risk that Mr. Shatila mentioned can be addressed with programs that support small feasible demonstration projects now, so that we can get that experience, get that knowledge that is needed to scale up the electrolyzers, but also on the other side, the use of green hydrogen in the steel industry, in ammonia, and in methanol production. And yes, that would cover both the technology risk, because demonstration projects are developed just to see if the technology, what may not work in the technology, the demand issue, because those will be linked, and the market price and the market risk too, because also, the first projects are likely to be captive hydrogen projects that are likely to be installed nearby the consumption centers, and they will have a demand already met locally.
Okay, I mean, Rashma, just to talk about sort of the progression of where we expect progress, in the year ahead and in the 2020s. You know, we recently hosted a hydrogen workshop. Suhail was one of our guests. I believe Emanuele, I think you were there as well. Yes, correct.
Yeah, it was.
Yes, and you know, one point that was made there, we've got the blue hydrogen, the green hydrogen. You know, the blue hydrogen is considered as a transitionary hydrogen, if you like, until we get to green, and that we need to be a little bit patient when it comes to pushing for the green solution. Because we need to continue a viable supply of energy, no matter what it is. And that, you know, we're already there with blue hydrogen, i.e. the CCUS technology, etc. is there. You know, but still there were questions whether the CCUS tech is advanced enough really to even able to scale that up in the next decades. Where are we with that and is there a hesitancy to skip it and go to green? Is that kind of what's happening?
Definitely, there's a kind of debate internationally around the colors, right? So there's the green, there's a support camp for green, there's a support camp for blue, and definitely in the region, given that we are oil and gas producing and exporting country, and the strengths lie in the fact that we are probably the oldest producers and consumers of hydrogen within the oil refinery process, and CCUS in the region has been demonstrated over the last decade or so, because the Al Riyadh plant, for example, was a pilot project which started in the UAE. And there they have seen success and they've seen good use to it. And it's become a business case. And therefore, they're using it for scaling up and as part of the ADNOC's climate change target. So CCUS is definitely on the curve towards maturing in at least in the Gulf region, because there is this coupling with the enhanced oil recovery. There's a use for the captured carbon. So in that sense, given the strengths of the region and the demonstrated success of CCUS, I would say in the region, blue hydrogen would definitely be a very strong contender for a long period of time. And given that we are really driven by external signals. So the demand for hydrogen is not really internal in the Middle East and in the Gulf at the moment. It is driven by external signals from Japan, from the EU, where they have decarbonization as well as energy security, which are part of their hydrogen strategies. And they are our biggest kind of bilateral partners in most of our projects and technology demonstration projects. So in that sense, I would say it depends, the lifetime and the longevity of blue hydrogen depends on the client base. And as of now, there are takers for blue hydrogen because green hydrogen will not be produced in the capacity that's required for the short term.
So on that point of demand again, and linking it to the sort of blue versus green, of course, the Middle East is blessed with oil and gas, but it's also been a very big success story in terms of what it's done with renewables, you know, and that is obviously going to strengthen its case for green hydrogen production. But on the demand side, Suhail, I mean, Reshma just said, you know, the main demand centers are Asia or Europe for hydrogen or ammonia or products of. But what about the argument of the region trying to secure domestic demand as well and trying to get the industries that exist to take that up? I mean, is there a case to be made there?
Yeah, I think some regional countries here announced their net zero pledges before or right at COP26, especially Saudi Arabia, the UAE, Bahrain, by 2050, 2060, or India by 2070. So I believe that the countries, regardless of everything else, they are looking at CO2 as a negative externality. The social costs of CO2 has to be internalized in any commodity. And this has to be done whether you are using that commodity domestically or exporting it. So that's a social objective the governments are pursuing and a responsibility to their constituents, basically. So from that baseline, basically, what the countries are doing, they need to incentivize to a certain degree domestic demand by leveraging the anchor loads, as Reshma mentioned, the petrochemical and the refining, basically looking at the anchor loads which are currently using gray hydrogen and trying to replace that with a cleaner source of hydrogen. So I believe that the first off-taker will be the petrochemical and the refining industries. I mean, in my perspective, hydrogen cannot be used everywhere. I mean, from a scientific point of view, From a volumetric efficiency, if you want, fossil fuels are much more efficient than hydrogen. Only from a mass perspective, it carries more energy. So hydrogen could be used for the hard-to-abate industries or the hard-to-electrify industries, such as petrochemical refining, smelters, aluminum, iron, cement industries, heavy-duty transport, maritime transport. So all of that, governments are trying.
And a lot of which exists in this region, obviously.
Yeah, exactly. So starting from that, so creating some sort of domestic demand. But I think on the onset of the hydrogen markets, most of the supply will be going to export markets, especially to Southeast Asia and to Europe.
Okay, Emanuele, on the concept of trying to push hydrogen solution forward, looking at the year ahead, one conversation in the climate, change debate is the issue, I suppose, dilemma also at the moment still, of carbon credits, of the offsets market, of trying to sort of put a value on things. Or a tax on things, let's say, or replacement value. How important is finding a solution to that, the whole carbon credits global market, to us then being able to also make progress for hydrogen to become more accepted, more used, more tangible?
Well, yes, carbon cost, carbon credits, carbon price, or ETS systems are always have been in our discussion, because let's face it, the fossil fuels benefits of the fact that we don't account for their actual damage to our planet. And once we factored it in, most of the time renewable energy becomes cheaper. Now, renewable energy from the power sector is already cheaper, and that was thanks to dedicated support given by trailblazing countries that, however, didn't wait for the carbon cost to be high enough to cover the gap. Instead, they supported the renewable energy with dedicated support, feed-in tariffs, auctions, we know them, and that didn't the carbon costs were just too low to cover this gap. However, what we are seeing now is that carbon costs are already, in particular in Europe, are high enough to make, for example, steel making with green hydrogen cheaper than the current production with blast furnaces. Now, we would need this cost to be permanent, but the ETS system is a market-based one, so it's possible that in the future this price will go down. Also, while industries will become more and more efficient, and therefore will not need to buy carbon credits. So this cost of carbon needs to be around $80 per tons for very long period to support the development of hydrogen direct reduction of iron plus electric arc furnaces to be installed in Europe. And if we look at ammonia, these prices need to be even higher, around 200. So carbon costs are important, but we cannot wait for them to be formed and to be in place. Also because we know it's a very hard pill to swallow, and it's very hard to put a price, a carbon cost that is as high as it should be if we consider all the externalities. So we needed to put some carbon cost, but that's not the silver bullet. At the same time, it's very interesting, the proposal from the EU of having a carbon border adjustment mechanism. That is going to actually change how we perceive import taxes, because it will be the very first import fee based on carbon content. And the recent agreement between the US and the EU about carbon content tariffs for steel and aluminium proves that this topic is already being somehow digested by large economies. And this creates a captive market for industries, for green industries, being them steel for the agreement, but also ammonia or whatever in the future. So carbon content of materials will be important. And we already are seeing that countries outside that border are adjusting their targets, the proposal to meet those mechanisms. And it's a very nice dynamics to be seeing now.
Yeah, and I mean, so Emmanuel and Reshma, just to go to you on that. So the EU, you know, has been at the forefront and leading really when it comes to the whole, you know, clean energy transition from a policy point of view, let's say. And you know, obviously the region here in the Middle East, we're looking at producing hydrogen to export mainly, and maybe find some domestic users. Which do you think, Reshma? Do you think Asia obviously is the other market for Middle Eastern energy, clearly already very established partnerships there, and you know, not infrastructure but links and partnerships and history, and that would naturally be you know, a very natural route for the region to take. But you know, how is Asia anywhere near where Europe is in terms of the policy front of making it an attractive market to export to, if you like, or will the region want to go west because the EU has it sorted?
Here, I would like to take the example of how Japan has crafted their hydrogen strategy. In Japan's hydrogen strategy, it's not just about the hard-to-abate sectors, it's really about moving to a hydrogen society. They're really trying to wean off hydrocarbons, and energy security stands as one of the strong pillars around why they want to move to hydrogen, right? And we see that also with other countries in Asia, like in the case of India, which is a very strong importer of oil and gas. So where energy security tends to be part of their hydrogen strategy, I would say that they're more flexible around the colors. So they're open to blue. And there we have a strength in the Middle East. And thus would facilitate a greater and better partnership. And in that sense also, Europe, in the European hydrogen strategy, they do look at local supply first and then move to forging partnerships. They've already put in place several bilaterals, a lot of discussions, pilots around the world, but really they are looking at that in the case of long term. But in the short term, Japan is also already working on the transportation pathways and technologies around hydrogen, around ammonia. So they really are taking the lead in terms, or at least are on the front line, or the front runners in terms of reaching a globally traded hydrogen market.
Okay. So Hela, just to pick on the point of the certification standards, you mentioned that in one of your opening comments. And presumably, global certification, right? If we're looking at a global market here, how difficult is it going to be to establish those standards? Given the era that we're in, and given that we're looking at an import-export market, right? We're not just looking at sort of certification domestically within countries or even within regions. Where are we on that front, and what will it take to propel it forward more?
Yeah, I think it's going to be very difficult and very complex, especially after the scene that we saw at COP26. We saw a certain type of disagreement or a schism between the developed nations versus the developing nations. I saw at COP26 that all nations agree on one objective, that we are going towards a low carbon future. However, the uncertainty here is that different nations will pursue or will chart this transition path towards net zero in its own way, because of three main variables: the level of economic development, the level of energy security, and the spectrum of energy mix that is inherent to each country. So I believe starting from that, maybe some countries will be using more hydrogen, as Reshma said, in Japan, while other countries will pursue blue hydrogen. Other countries may pursue CCUS technologies, leverage upon electrification, for example, or biofuels or synthetic fuels. So every country has its own context. Starting from that, to agree on a certain certification standard that defines what is blue hydrogen or what is green hydrogen, I think it's going to be very difficult. Some nations are trying to define it as low carbon hydrogen, basically to cover the whole spectrum. But I believe that starting from that, the certification part of it will be challenging, and it will be an additional risk for investors, because if I finance a certain transaction for blue hydrogen and the export shipment gets rejected at the border, so who's going to cover that cost for me as an investor? So all of this will play into activating the hydrogen markets. But I believe that seeing the agreement on the Article 6 at COP26 on the carbon markets and the ability which opened the door for having a global carbon market and trading carbon offsets, maybe there is a hope to agree on a certain definition of what is green, what is blue, and other colors of hydrogen.
Thanks, Ed. Okay, well, I'll just see, our team has just put up the survey question for today's session. The biggest step to accelerating a clean hydrogen ecosystem in the Middle East must be the following. So they're probably all relevant, but which one would you say is the biggest step? More pilot projects, detailed hydrogen roadmaps, cross-border collaboration, or financing, large committed financing? Emanuele, I mean, of those four, which would you say would be the top priority for you?
Well, that's a very hard question. I think all of them are very good examples of what we needed to do. Just to come around the question, recently the World Economic Forum and ARENA created a roadmap, a set of policies needed in the next 10 years, for now for Europe and Japan. But in both cases, we identified 36 to 38 measures needed to scale up hydrogen from now to 2030. So the size of the challenge and the size of the different policies needed to actually make this happening is very large. If I have really to pick up an example from this, I like the idea of the pilot projects, because as I mentioned before, those are ways to solve the chicken and egg problem and to create that knowledge needed in the region. Now I see also already the results. I'm second place in my shows. And the first is roadmaps, which, yes, is needed. I mean, in ARENA, we identified the four main pillars for creating an enabling environment for green hydrogen. And the first one is indeed strategies and priority setting that will solve a lot of issues and will clarify where and when hydrogen will be consumed.
Yeah, and I mean, and part of that roadmap, I suppose, is that investors know, what's happening, right? What's the plan for the region, and also, what are the incentives going to be? Even Reshma, to go to you on that, for sort of, first time entries, if you like, those who are taking the risk up front ahead of everyone else. Taking on probably larger costs than that's going to be the case in 5 years' time if they're committing to contracts, offtake contracts, etc. That point came up a lot in our workshop of, again, the whole thing about incentivizing demand, securing off-takers. They want to come forward maybe and commit to buying hydrogen, but how do you protect those, Reshma, those players when within a year's time, those costs are going to come down, right? And pricing, on the pricing front. How do players feel about that in today's market?
I think this is a very difficult question to definitely answer at the moment. And this is at least in the region, right? So we have seen that with the renewable projects as well, that it always started with the pilot, and it was always backed by government-owned utilities, or in the case of hydrogen, will be state-owned, oil and gas companies. So there is this bankability created by this partnership with the government-owned or state-owned companies. I think that's the way it works in the UAE, in the Gulf, in the Middle East probably as well. And there, the early movers also become the ones who benefit in the long run from the prices which have dropped. So we have seen the solar prices go from 5.25 with the first pilot in Diwa to the latest going to 1.25, right? So there is this benefit in the long term for the first movers in the region because of the governance structure and because of the fact that we've got state-owned utilities and oil and gas companies.
So Hale, do you think that one debate or discussion point this year, when you talk about OPEC and OPEC Plus and the whole oil price situation and the lack of investment by the industry into traditional conventional energy, that's been a big point of debate even at COP26. It came out as one of those points where, hang on, we all want to clean the environment, but conventional investment has fallen way behind, and and all these companies who are investing in green and blue aren't going to be able to do that if they can't keep up their other revenue streams. So where does the region stand on that, Suhail, today with these traditional oil producers who have another 10 years of guaranteed revenue, and then the world's changing, right? Do you see that at all hindering their very ambitious plans for clean energy? Can they balance the two as they go forward, and what oil price will determine that?
Yeah, I believe that the discussion on, especially after IEA's report on halting all upstream investments in order to reach net zero by 2050, I believe the region took that negatively and started to react on that. And that what created some sort of a green paradox, if you want, where the region started monetizing their oil and gas assets in a faster way. But maybe in a cleaner way. That's their objective, that we're gonna still monetize our oil and gas assets, but in a cleaner fashion. I mean, after all, if you hold all upstream investments right now, there will be around $13 trillion of oil and gas assets at $50 per barrel. I don't think that countries will gonna remove or give away that value that could have been used for especially economic development within their own countries. One thing I want to also add to that is that currently the investments in the upstream sector has been lagging, not this year, over the past maybe 5 years at $350 billion per year. However, when I went at ADIPEC, I was attending ADIPEC, and it has been announced that we need at least $600 billion in upstream investment just to sustain our current level of consumption of oil and gas. I mean, after all, fossil fuels, they power up 80% of global demand, and rewiring the whole energy ecosystem will be challenging, and it will be costly also. So I believe the region is moving in a very prudent manner. I mean, they are monetizing on their existing oil and gas assets. They are leveraging their points of strength, while at the same time taking advantage of all the opportunities towards a clean and net zero future. For example, leveraging on the renewable energy sources, on access to markets, basically partnerships with major off-takers globally. So I believe, the region is trying, especially the GCC region, is trying to balance out this move. As I said before, I mean, the path towards a net zero will be inherent, and it will be special to each country based on its own context.
Well, thank you, Suhail. And of course, the region is hosting the next 2 COP meetings in Egypt and then the UAE. So it has a lot to, it's a hosting, obviously. Everybody is not responsible for the climate agenda, but it certainly will be coming under the spotlight more and more, and is on the right track, as Suhail said. I'm afraid we've run out of time very quickly today. So I'd like to thank our guest, Rashma. Thank you very much for joining us. Emanuele and Suhail again. Thank you very much, everybody. Have a great remainder of the week, and happy holidays for those of you who are taking some vacation and some leave as we end the 2021. And we look forward to seeing you all, inshallah, in 2022. Thank you very much for joining us.
Thank you. Thank you, Diana.
Thank you. Thank you.